Afternoon, everyone. I hope we're all having a good week. I am privileged to be joined with Sir Alan Sherville, who is the original Avocado Alan. These are the phonies here, the original Avocado Alan. And Alan, obviously, years of experience in mortgage writing and financial advice. So I appreciate you joining us today. As kind of the topic says up there, we're going to talk about these 5% deposit mortgages, 95% loan to values, and talk about, I guess, the good and the bad of them, I think is value, and what advice people should be getting and given, because there's been a good buzz about them, but I think it's good to get really into the crux of exactly, I guess, the foundations of how they work, and is it the right decision for a first-time buyer or not, as the case may be. But first of all, how are you doing and how is business?
Yeah, very good, thank you. Very good. Business is very buoyant. It's the stamp duty holiday now, the extension, etc., etc. New Help to Buy kicks in next month, replacing the old, and of course the 95% guarantee. The phones are getting busier because people think we will have the rates and know the numbers now. But business in general, it is. Oh, so busy. I mean, especially the areas we work in, there is not enough supply for the demand, as you probably know, and it's very good. And we've seen, property price growths over the last probably 10, 15 years, and it's always been an upward trend. And I think Wokingham covered 7.3% increase last year. But like investments, property prices and investments can go down as well as up. So. Hence the chat about the 5% mortgages.
I think it's the stamp duty extension has brought in this local area, and what we've experienced at Avocado is by far and away the most successful month we've ever had in terms of helping people move and getting properties sold. So feeling the same as you. Need some more hours in the day, don't we, in this industry?
Yeah,
and
absolutely.
we're lucky to be in that situation, really.
Yeah, I mean, and having everyone working from home, so it's that's part of our frustration. I've only got 9 people, and we're coping better than these huge corporations who have got millions to throw at it. The service levels for most of the lenders are now caught up, and they're getting back on stream. But it was absolutely atrocious. But you would have thought that with all the money they've got behind them, they could have been a lot slicker, a lot quicker.
Yeah, I think fair comment. So we want to talk about 95s and the 5% deposit mortgages that are out there. There's a few lenders now, I think, that have started to join the party.
Yeah, there's a few lenders now doing it without the government guarantee. Accord, Bank of Ireland, Skipton have all brought rates out. They're all around about 4% though, and they're all around about 4% and 5-year fixes. We don't know what the government guarantee ones are going to be like, but I would imagine they're going to be around about the same rate, which makes it very expensive. Very
does.
expensive.
How does that compare to the sort of average price for a 10% deposit?
Well, 10% deposit, if you bought a house or apartment at 300,000, you'd need 30 grand, obviously, for a 10% deposit, but then you would get that for £1,072 a month. On repayment over 35 years, whereas with the 5% at a rate of 3.99, it's £1,260 a month. So that
I would say it's the difference of it being cheaper than renting versus about the same or slightly more. The difference of the 5 and the 10%.
Absolutely, yeah. You are paying it down over 2/3/5 years. But I think I'm not going to put people off buying a property, but we really have to go into the what would happen, what can happen scenario, because we have to give qualified advice to these people. And it's not like buying a second-hand car or a pair of shoes and you don't wear them again. You've got that for life. It's a regulated product, so we've got to make sure it is there. With 5% at 3.99, what we've got to remember also is the 90% at 3.99 6 months ago. They're now at 3.09, so they've come down almost a whole 1%. So And what we're noticing is these 90%ers are coming down week after week after week because there's more and more competition out there. Lenders have an appetite. They've got their money. They need it. They need it out in the market. It's no good sitting in the vault. It's not going to make them any money. And the only thing they've got to compete with is rate.
So they want to lend, don't they? They can
absolutely.
see.
Yeah, they have an appetite to lend. Yeah.
Yeah.
What really annoys me is, they say, oh, we're pricing this due to risk. Well, I can't see what the risk will be if the government are guaranteeing the difference. So where is the risk? So, if they're going to come out at 4%, it's not really a help.
It's a good point, and I think we'll cover that in detail. We've got a few people saying hi. So we've got Josh is saying afternoon. We've got Jamie saying hello as well. Georgina came in very quick with, will this kickstart the boom? We'll definitely get to that at the end of this chat. So if people have got a question for us while we're live, bring them in. We're going to talk. We'll answer them live. We're more than happy to kind of engage in questions. Andy Mead has just jumped in and said, how long do you anticipate rates staying as low as they are? And I think he's probably talking about mortgage rates in general, maybe rather than the 95% loans. I've got a question of whether we think those 4% average will decrease. But in general, rates are very, very good at the moment. Do you think that's going to stay the same for the next 12, 18 months?
My personal opinion is that yes, they will, because inflation was down again this month. And Bank of England base rate at 0.1%, can't really go any lower, can it? I don't think we'll ever go negative. But what you understand is, I don't know how much it is now, 300, 400 billion pumped into the UK from government funds here, there and everywhere. But no one's been able to get out and spend any money. So
and also life is different. Life is very different.
Absolutely. So I think that I think we will bounce back. Retail and leisure is certainly going to bounce back very, very, very quickly. And the chance of the government will want people to spend. So I can't see them increasing bank base rate because they'll want to get their money back into the system. So personal point, but I just don't see interest rates flying away for the next 2-3 years.
It's good. It's really positive because it's really exciting for people looking to get on the housing ladder at the moment, because it means it's affordable and people purchase based on affordability, not on purchase price. So I think if it continues to be cheaper and the loan to values stay there, there's your phone going again, and the loan to values stay there, then the positive news for the housing market is that more people can afford to purchase, which is what we want. Sanjay's talking here. He said, speaking to buyers recently, he's one of the avocado partners. I'm worried about how long they're fixed in for and the 5-year fixed deal. And I think it's something to talk about. We're obviously discussing the 95% here. Why do you think they are tying people in or looking to tie people in for the full 5 years at such a high rate?
Profit. Their profit. They're looking after their shareholders. What you've got to imagine is, they've got a vault full of money. Bank base rate is 0.1. That's not necessarily what the lenders borrow it at or buy their money at. But they haven't got one shelf for 95%, one for 90%, and one for 60%. It's the same money from the same sources. So if they can do, Barclays have got a 1.2% at the moment. 60% loan to value, but 1.2%. The banks, they're making money at that, as they wouldn't be lending it. So how can that 1.2% all of a sudden go to 4% with a government guarantee?
And I think they seem to have been the first batch, the first 4 or 5 lenders that have offered the 95%. I guess they're in uncharted territory for the last few years, so they've got the ability to offer it at a higher rate because there's no other option, is there? I guess no. So profit margin is key, and it's almost a little bit of a concern because you think that is quite expensive. Will it be the same in 6 months' time? Obviously, we don't have a crystal ball, but if you were to advise one of those buyers Sanjay talks about, or you were to advise a niece, a nephew, a son in terms of being a first-time buyer and using one, would you advise them to go for it? Are there other options available for people?
Yeah,
What would you
I
say?
think that why the lenders are going for the 5-year fix on these high rates is one, probably profit driven, and they'll then point that to risk as well, is because if you're fixed on that for 5 years, over that 5-year period, you would have paid off a lot of equity. So at that stage, there'll be more equity in the property, and then it'll be easier to remortgage. But realistically, what we would normally do with first-time buyers is 2-year fixes, because why would you want to be on 95% rate for any longer than you needed to be? Because even if there wasn't any property growth, you'd still be paying off equity monthly, and likewise you'd go 95. My personal opinion is I'd give people the choice, but if it's advice, my personal advice would be, unless you're below 75% loan to value, I think you just sit on 2-year deals.
Well, it's interesting because Jamie's actually asked a question around that based on remortgaging and the advice that you would give for someone. Would you say 2 or would you say 5? And you need the circumstances, I appreciate.
It is, absolutely. I mean, everyone is individual. But as I said before, the sooner you can get into the next rate, because, we've got 95% rates at 4%, 90% at 3.19, 85% 2.69, 80% at 2.04, and at 75% you're down to 1.31. So you're down at least 0.5% on every shift. So why would you want to be paying 1% more for longer than you need to?
Interesting. So that 75% loan to value is the golden ticket for the remortgage.
Yeah, that's when the proper rates come in. Obviously, but some lenders also do a 60% and a 50%. But if you're at 75%, then I would seriously look at 5-year fixes, because money is so cheap at the moment.
Yeah, good advice, and it's something that I'm looking into at the moment as well with my property, is getting that 5-year potentially as the best option. Amy on Instagram, before we went live, actually put a question in, and she said, will the 5% deposit mortgages mean the rates will drop further on the 10%? And we've slightly covered it, but do you think they will move those 10% even cheaper? I think we've seen them drop for sort of 3 months in a row now, or do you think it's probably about right?
I think they'll always be on a downward shift. I mean, as long as the lenders have got money to lend, they want the money out with the clients. They don't want it in their vault. So I think they will keep competing, and it's only going to benefit the buyer. So that's going to be good. But with 5%, there's so many different ways of getting extra money. You've got the bank of mum and dad. Can you get a bit of inheritance early? There's certain lenders out there, 2 or 3 lenders will actually let you get a loan for part of the deposit. And if you think about it, if you went and borrowed another 8,000 or 9,000, if you were short on that, providing the affordability's there, it's going to be a lot cheaper to do that and get a 90% rate or an 85% rate than it is to go for these 95s. In fact, the monthly saving, if you look at between the 95 and the 90%, you've got £200 basically. Well, £200 a month will get you quite a big loan, but then you're only paying a lower interest rate on a big chunk of money.
Yeah, it's interesting because it is 25% less, isn't it? From
absolutely. Yeah, absolutely. Yeah, and all of these things need looking at, where we are different, we are independent, we're whole of market, and we treat the customer. I treat them all as my children, really. I've got 5 kids and 9 grandchildren. I know how hard it has been for all of them to get homed, as it were. And it's just trying to point people in the right direction without any pressure, and we'll do what's right by the client, not what's right by company figures or the lender's needs.
Yeah, I massively agree, and I often say to people when they talk to me a pre-valuation, what do I need to do if I'm looking to make a move? And I say, you want a really good power team, and too many people do the online check, and a part of that power team needs to be a quality, experienced financial advisor, much like yourself at AFP Wokingham, because it's value that you get from that experience that's vital at the moment in the marketplace. Same with a solicitor. Use a really good quality solicitor. Don't go shopping around for the cheapest online. And that power team, obviously alongside an estate agent in a pink hoodie, can be the difference of making it work and not work. Lee's asking a question here around turnaround time, and when we look at this month being so busy because of the stamp duty holiday extension, we're now getting to the point where maybe in the next sort of 7 working days it's going to be too late to agree a sale and probably get it through, being safe. Maybe some people will miss it even with sales agreed now with the wrong broker or the wrong solicitor or the wrong estate agent. But for you at the moment, turnaround times for mortgage offer from application, slower, faster, better than last year?
Never been quicker. If you're with a high street, if you're with a Halifax, a Nationwide, a Santander, and that West Virgin, etc., they're turning it round from application to offer 2 weeks. You know, we've had some if they do a desktop valuation, which is where the surveyor doesn't actually go to the property, which is normally done on lower loan to values, you can actually get even a purchase mortgage offer the next day. It's absolutely astounding.
So the mortgage is not the problem, as long as you know who you're talking to. Getting the mortgage offer.
Absolutely, yeah. It's all down to preparation. It's, you know, we won't even start to do an agreement in principle or a full mortgage application until we have every piece of documentation that we've asked for. Because there's no point. You know, sometimes people send us pay slips and 2 months bank statements. Well, we want 3 months pay slips and 3 months bank statements. Oh, can't you just get that done? No, we can't. It's a regulated industry. You know, we have criteria that we have to meet. So it is providing, you know, we'll ask you for a list of requirements. Once we've got all those, it's very slick operation. It's very quick, but it is just preparing for it and doing due diligence on the client and on the lender we're likely to go to make sure that the criteria meets the client's needs first time. Otherwise, we can be in and out of different lenders, and I think that's what's frustrating for some people.
It's good confidence. That's good confidence for a lot of people. Slightly off subject, but Josh is asking about second home purchases and what kind of loan to value you would expect for someone looking at second home, buy to let, holiday home, whatever it may be. What are they looking like at the moment?
Well, second home is you can get second homes up to 90% loan to value, but it's very rare unless you're earning really big bucks that it will fit affordability, because you have to obviously afford both homes, you know, and that's residential. Buy to let, 25% deposit. There are some more expensive lenders now, back up to 80 and 85%, so 15-20% deposits. Holiday lets, it's a funny old game. There's only ever a few lenders doing them, but they're back at 75%. You might some of them stretching to 80. So yeah, the market is picking up. Everyone's coming back. You know, we've even got some people coming in, actually advertising that they now do adverse. You know, not huge adverse, but there's always the same old people out there. There are adverse lenders, but we've got Metro Bank coming out now, so that they'll take defaults and county court judgments, etc., at a premium rate, of course. But it all seems to be coming back. And
I would imagine a slower mortgage offer as well on those particular ones.
Oh, absolutely. Yeah, it's a bit specialist. Yeah.
Good. Josh says thanks for that. Andy says thanks earlier as well. We've got a fan of yours that's commented and said, what have we got here? You said that to us when we first met, Alan. So pleased with your services for the last few years. So there we go.
Fantastic. Thanks, Alan.
Thanks for the comments. I want to talk about the 95s again and leaseholds, because most of the deals that I've seen at the moment, they're only available for freeholds. Do you think any lenders are going to come in, or is there any sounds or noise you've got finger to the pulse about it being available for leaseholds?
It's going to be very, very slow. Very, very slow. And it's not the cladding issue, because where we are, there's no cladding on the flats and apartments. They're worried about the downturn in pricing. I think what we're still having trouble with now, we're having trouble now with second-time buyers or people trying to remortgage these apartments, etc., which have the ground rent reviews. where they try. I mean, it's being outlawed now, isn't it? But there's still contracts out there, where the ground rent's going to double every 5 or 10 years, and that's causing big trouble. They don't like the cost being more than 0.1% of the property value. That's service charge and ground rent. So on a 300,000 property, they wouldn't want the charges being more than £3,000 a month, £3,000 a year, which is only £250 a month. And some of the service charges around, especially when you move over to Ascot Way, a lot dearer than that.
And the difference with having a lift often or not having a lift in the apartment blocks has a big impact on the service charges as well.
It's, I mean, all of the lenders, even with a decent deposit, it's all down to valuers' comments, and it's trying to get them valued is very difficult. And the lenders always worry about apartments and flats because it's the saleability. Their biggest concern is, or their worst case scenario is, if you default, they have to repossess, and they want what they class as their 30-day money. They want to be able to sell that property, and they'll know that they can probably get 75% of its market value within 30 days at auction.
Makes sense.
And that's why they're not keen in offering any more than that without guarantees or help over and above.
Makes sense. Sanjay's asking a question here about mortgage offers being issued. Are you seeing any lenders pull the plug before exchange? So offer, but then retracting the offer. Are you seeing much of that at the moment?
No, we haven't had that. That would be very, very rare. It could be where someone has all of a sudden been furloughed because, you have to, even if you've got your mortgage offer, you still have to update the lender with your circumstances. So it could be where you're furloughed. And we had one occasion where the lender didn't realise they were overexposed on a development. So whereas if you get a lot of new builds or you get a load of flats, and say nationwide, their thing is we don't want more than 20% of the development or the block. And we had one where the valuer actually put the mockers on it because the valuer went back, or the valuer was audited internally, and they found that it was over that percentage. And I think that's always the case where, if two are going on at once and they're both not offered, no one knows about the other one. So, no, it's very unlikely. There could be all sorts of things. If it's audited, there could be fraud issues or suspected fraud issues. But no, not very rare.
Very rare. Maybe at the start of the first lockdown, there was a few of them knocking around, but potentially not now. Any other advice that you would give people? And if someone's in rented, for example, let's say they're spending £12.50 a month on a rental property, we want to get them on the property market. I think me and you both sing from that same hymn sheet, but we want to do it the right way. What advice, or what's the first steps that you would say to people that are thinking, we haven't got big savings, but we've got good earnings, we feel secure in our employment? What advice would you give to them about these 95% mortgage deals at the moment?
Well, the 95% or 90% or any deals is before you start looking for a property, speak to a mortgage advisor. We get first-time buyers coming to us and saying, I've already put an offer in. Well, they haven't got a clue what they can borrow. They've been on an online calculator saying, yeah, we think we can get this. But when we then say, well, you both got a leased car at £300 a month each, you've got £4,000 on a credit card, you've got a bank loan for £250 a month, you haven't put that into that online calculator because it probably hasn't asked you. So your affordability is zilch, because you're spending more on your cars and your loan than you are on the mortgage. So it's just, we give free advice. It's have a 15-20 minute chat, get the basics of it. If you want to move it further forward, get an agreement in principle, we'll be on the phone for an hour, or Zoom in, or Skype in, or whatever you want to do. And we'll do it in any format you like. At least then you'll walk away knowing what you can do now. If you can't do anything now, we'll tell you what you need to do to make it achievable and when you can do it.
makes great advice, because it saves everyone so much time, heartache and disappointment when someone's found the property they want to live in, someone thinks they've sold the property they want to sell to then find the property they want to live
Absolutely.
in, and people haven't done their prep work. It's really disappointing for everyone, and it's really vital that you know exactly what you can afford to purchase before you go out there, and you sit down with someone like Alan and you do the budget sheet, you look at the affordability, you look at what the lending criteria is going to be, and then you go out and view, especially in today's climate. You know, you don't want to be going through people's houses when the risk factor is high with COVID and things like that. You don't need to be, because it's the wrong type of property for you. So yeah, I'd say echo that in great advice. Quick question that's just come in, Alan. I have a question coming back often. Is it now harder for foreign people to get a mortgage? A few European people seem to think so, which I guess relates to Brexit. So what's your thoughts on that?
It's difficult with some lenders, but you know, some lenders. It depends how long you've been in the country. Depends what your settlement status is. Depends what visa you're on, whether you're on a visa, a working class or a working visa, tier 1, tier 2. But no, it shouldn't be difficult if you use a good broker.
Good. And on that point, as we approach nearly half an hour of chatting, and I don't want to take too much of your lunch up, because I know my stomach is starting to rumble too. I want to say massive thanks for joining me. Loads of great questions there from everyone. So thank you for everyone that's engaged, commented, liked the video. If you're watching this and you're not watching it live, you're watching the recording afterwards, still fire your questions into the comments. If they're a question for Alan, I'll obviously send them on. If they're a question for me, then obviously I'll answer them. And if people do want to talk to a really good local quality mortgage advisor, then Alan and obviously Uncle Dave, that you've seen me on these videos, are partners in the mortgage game, and they're excellent people that always help our clients with any questions and advice. Even if they can't do the mortgage, they will give the right advice. So Alan, I massively appreciate your time. Anything else that you want to add, or any words of wisdom for the World Wide Web out there at the moment?
Well, no, I thank you for the opportunity to share this information. And, you know, we do have a wealth of it. It's only a phone call away, or a text away, or an email away. And don't be shy, you know, don't be frightened. We're not bank managers. We work for you. We don't work for a big corporation. You know, we're here to be helpful.
Yeah, love that. And that's a great way to finish it, is here to be helpful. Definitely the message that we put out there, and you guys. And yeah, really enjoyed the convo. Some great advice there for everyone. And hopefully everyone took a lot of wisdom from it. So I will no doubt speak to you again soon, Alan. Thanks very much.
Nice to see you. Bye.